October 29, 2019. Good morning, guys. It's Tuesday, and miss and squeeze continues to dominate the markets, and it is likely to continue doing so for the next few weeks. Now, top observations for the day is VIX versus S&P 500 actually create a bullish divergence yesterday on the VIX. VIX was actually moving higher while S&P was moving higher as well. That actually creates a bearish probability, especially going into tomorrow's Federal Reserve decision at 2 p.m. So we are expecting the miss and squeeze to be overlaid on the overall Federal Reserve decision. So we are expecting miss and squeeze to actually take place after 2 p.m. tomorrow. Now, clearly, Google is the next stock to join the miss and squeeze trend, and it is confirming and telling us how to actually trade the Fed tomorrow. Oil officially is down second day in a row, but no real market reaction so far, as oil clearly still above the 55 level. Now, some of the cool trades. My favorite trade for the day, guys, is CMI, because it's got a high history, high probability of a bullish reversals. And so we're looking to load up on CMI calls as the market opens. BYD, despite of the drop, it's currently trading at 84, 85 level. It is dropping on low volume, considering there is a 48 million of shares are ready to get unloaded. So far, pre-market volume is about 500,000, and it could have been substantially higher. We could have already had a volume on BYD of about 3-4 million shares so far pre-market, but that's not the case. So basically, in relation to where the volume could be on BYD today, this one is actually selling off on lower volume than it should be. So with that said, expect a very fast and fierce move higher in BYD at some point today. Now, Google, we're still very much bullish on Google. Actually, the report was the best report Google has had. Everybody's choosing to focus on the miss on earnings. However, the miss on earnings is due to the other bets that Google is making, which makes perfect sense because Google sales are at all-time highs. Google revenue sales number has never been as high as it just reported, so it makes sense. They want to use some of that money and put it into some alternative investments, trying to diversify their business. And XPI, basically anything that's been associated with semiconductor space, is there's no other trade apparently right now but to just buy them damn things. And so NXPI bits the earnings and the stock pops. We still think it can pop further and possibly hit all-time highs, as a lot of other semiconductor sectors has been. But basically wait for a pullback to jump into this one. Some of the other things I didn't type in here is MLM, Martin Marietta, and a couple other trades we're going to review here. So basically, Google miss is actually better than the Amazon miss. The main difference, as pointed in the video I posted earlier this morning on YouTube, guys, is the fact that everybody's actually raising Google target price despite of this earnings miss, because the analysts are actually focusing on the best quarter as far as revenue concerned that Google has actually had. Now, in comparison, Amazon's miss was much worse because analysts were actually downgrading the target prices on Amazon while still maintaining the buy rating. So what appeared to be a rather fierce move in Amazon shares higher could actually be easily repeated by Google, but considering the action of the analysts pre-market, we can actually get a very substantial move higher in the shares of Google. So the target price of $13.75 is still very much in the reach. So don't panic. If you load it up on Google calls yesterday, they will make money by the end of this week, guys. You're going to have to, though, stay with the trade. You can easily get a $30, $40 move higher in Google once the market opens. And that will officially put us at about 1320 level, 1330 level. That will put Google at all-time highs. So with that said, expect a follow-through move in Google shares higher, possibly reaching 1375 level by Thursday or Friday. Now, next week's target for Google is still possible to hit the 1400 mark. So still very much bullish on Google despite of this miss and squeeze scenario actually developing. Now, we're clearly watching for Amazon behavior next 48 hours, as pointed in the video yesterday. And so far, Amazon is holding up. It did make another bullish move yesterday. The importance of making this observation again is how should we trade that Federal Reserve announcement? And so far, Amazon has pointed to the fact that initially it's going to drop, followed by a move higher. At this point, we are officially second day in a row higher above the critical level of 3,025 on S&P 500, basically maintaining all-time highs. Now, this is something new, which the market has not done in the last 3 years. So very, very important stuff happening right here, guys. So with that said, expecting a drop following the Federal Reserve announcement, followed by a move, a short squeeze higher. So easily we can get another green move today. The probabilities are easy. It's either going to be move 8, 5, or 7. So another bullish move expected today, despite of some of the divergences developing in VIX and in the oil sector. Now, overall, remember, move 5 could be just kind of like this, kind of like the end part of the move yesterday where we're just fluctuating plus minus a few points. So very likely to happen today. The markets overall don't expect a huge volume. It's going to be waiting for the decision tomorrow. So don't trade down the directional stuff today. Wait till tomorrow, guys. This is exactly what we're expecting. 2 p.m., expect the market to do this. And maybe about 2:30, 3 p.m., expect the market to reverse and do this. Now, this could actually resolve into a longer move where initially the market's going to fall between 2 and 4, and following on Thursday, the market's going to reverse and do this. But in either case, it's going to be a miss and squeeze type scenario. Everything's pointing to that. Ton of companies announcing earnings, ton of great trades this morning, guys. The favorite trade is right here, CMI. Cummins Diesel does a ton of business in China. Chinese stocks have been showing some strong momentum lately. This one is actually dropping from yesterday's high of 180 bucks all the way to 170 pre-market on very low volume. So with that said, if you study the history of CMI, it has a very, very high probability of reversion. If you guys have a small account, this is the trade that I would be taking today. If your account is just a few $1,000, this is the trade right here, because the call options, if that is given, of course, it is going to open at 170, 173 level here. Call options are going to be super cheap that are going to be like at 180 level. This stock has a history of making 8, 10, sometimes $12 reversals throughout its earnings report. So if it opens at 172, it can easily pop 10 bucks and actually finish at 182 levels. So those 180 calls are going to be super cheap. You can probably scoop them up for pennies on the dollar, like maybe 10 cents, 20 cents if the stock opens around this range here. Now, a much less aggressive bet would clearly be just buying the 170 calls or the 175 calls. They're not going to be a ton of money, considering that the stock is dropping about $10 pre-market. So hopefully it's going to stay there and create an opportunity for a fast and furious miss and squeeze. Now, BYD calls at the open mentioned that despite of these huge move, a lower pre-market, we're still very much bullish on the stock here, expecting a huge upside potential in this. Buying 85, 90, 100, even $110 calls in this name. Actually, the earnings report was rather nice. However, I think everybody was waiting for maybe some kind of announcement with McDonald's deal. There was just not a whole lot of stuff that they discussed in the earnings report besides beating the numbers and moving their forward-looking projections to another level, which also exceeded analysts' expectations. So they beat on earnings, beat on revenue, beat on everything, and the stock drops. Nice setup for a beautiful pop, considering there was no miss in this particular stock besides some extra hype. So the only miss that we can portray on this report here, guys, is the fact that it missed on some more crazy stuff. So none of the announcements were able to capture the hearts of this high flyer yesterday, but that sentiment could be quite reversed, considering going into the earnings report yesterday, we observed a very strong volume. About 5 million shares were purchased to the upside when the stock moved from 99 all the way to 108 bucks. 5 million shares. We have not seen a volume like that in BYD in a while. So expect a miss and squeeze type opportunity here in the shares of BYD. WAT, 200 calls at open. Similar strategy, guys. Miss and squeeze. The stock is down. Super low volume. Very good company. I think they're going to buy the miss and they're going to squeeze the hell out of the short sellers. Now, Shopify, this is a highly contradictory trade for today. Everybody expected some killer results from Shopify. notably considering that it missed, and it is highly correlated to Amazon. We're expecting it to do exactly what Amazon did, and that is to do the miss and squeeze. So basically, while it's dropping pre-market, and hopefully it's going to open at 295, it's actually going to pay to buy calls on this name as well. And XPI, as pointed out earlier, we want to catch the pullback. All the semiconductor stocks have been nothing but bullish, and this one is no exception. Bits on pretty much every number. Expect a pullback maybe to the 110 level, 112. That would be a good target area to come in and buy some calls in expectation of the stock hitting 120 level in not so distant future, maybe over the course of the week. MLM, Martin Marietta Materials, MLM. Basically on this one, guys, we've been bullish on this since the stock was at $187. I remember posting some videos based on the Trump infrastructure spending bill. Therefore, there's still upside. I mean, the banks like the stock. They're buying everything. They certainly are going to continue buying this stock as well. Expect a drop once the market opened, maybe to about 276, 274 level. Use that level as an opportunity to buy calls, not puts. Yesterday was officially a move 7. I had some questions in the chat. Why was it a move 7? So clearly the market initially opened slightly higher than the prior day. That's the key. And then it moves substantially higher. Reverses lower, they buy the dip here. Reverses higher, reverses lower, they buy the dip. So the characteristic of buying the dip, in other words, bullish momentum in buying the dip is easily witnessed here. Somebody asked in the group, why was it not a move 11? Well, move 11 is a complete pyramid formation. In this particular case, let me pull up the 2-day sequence, which is 8-7, to help you visualize this a little bit better. Basically, move 8, initially we open under the water. We're in the red, and then shortly after the market opens, we basically get in the green, and we maintain that level. The next day, we're opening above the level where we closed the prior day. So that's a characteristic of a move 7 opposed to a move 8. So move 7, we're opening slightly higher. We continue higher, and we close higher than where we've opened. That is why we're recording it as a move 7. There was a bit of a pyramid that was trying to shape and form here, but nonetheless, it didn't stay as a pyramid, similar to the development of the move 8 here. When the market tried to dip, institutional investors came in and they bought the dip and maintained the stocks at the higher level for the day. 5-day sequence 6, 7, 5, 8, 7. This is how it looks on the chart. Notably, the last couple of days, we got a couple of bullish flags. Bullish flags is very bullish momentum type trend that we're observing here, and it's likely to resolve higher today, followed by a drop tomorrow, and the resolution ultimately higher again. Next market move for today, we are expecting 5, 7, or 8. And VIX clearly is a warning sign here that tomorrow we indeed could very much drop either pre-market or right after the Federal Reserve announcement at 2 p.m. So far for today, this strategy is for today, guys. We're buying calls near the money. VIX is still numerically low. It is downtrending despite of a small uptick yesterday. This is how the stuff looks on the chart. Sort of created a double bottom, but while the market was moving higher yesterday all day, so was the VIX. The VIX continued to move higher, and it is moving higher pre-market. So something to observe if this trend is going to maintain itself over the course of a 72-hour time frame. That is definitely something to be paying attention to, especially if oil futures continue to dive. This VIX trading tunnel particularly is interesting because if we get 3 days in a row a closure above 13.4, we could very much revisit our upward trading tunnel in VIX at 15. It is likely to happen at 2 p.m. tomorrow. So for a quick trade, VIX calls actually do sound reasonable despite of the market being overall bullish. So bottom line, guys, key takeaways: miss and squeeze continues to dominate the market. Focus on trading earnings instead of indexes until tomorrow, 2 p.m. Buy calls in the money and near the money for the next 48 hours. CMI calls, Google calls, Amazon calls, BYD calls. Let's rock. Make it an awesome day. I'll catch you on the next trade soon.
see that